Some of the market action 90 minutes into the trading day, and stocks lower today. The Nasdaq on track to snap a 6-day winning streak. And joining me now, we've got Bob Dole, Crossmark Global Investments CEO and CIO. And Bob, good to have you here with us. You say you're continuing to position defensively. How is that kind of defensive positioning playing out in specific names, and walk us through how you're doing it?
Sure. S&P 500 is up 1,000 points in the last month plus. And so we think it makes sense to be a little more defensive again. We are focused maniacally on cash flow. Therefore, what's the multiple of a stock to cash flow? And we want profitability, so return on equity. We combine those two things. We think that's a defensive positioning. Generally leads us to more quality companies, for example. Our favorite sector has been and remains financials. This sector is cheap relative to the market. A lot of the lending this cycle took place outside the banking system and private areas. And so we think that's going to mean we're in pretty good shape from a balance sheet standpoint for many of the financials, and the biggest beneficiary of the deregulation environment in which we find ourselves. So that's a bit of a highlight. The kinds of names we're buying, I would highlight the financial services companies, Visa and Mastercard. These are not exactly cheap financials, as many of the others are, like many of the banks, but these companies are machines. They crank it out. Their growth in transaction volume continues to defy gravity almost. These companies are gaining market share, especially outside the U.S., so further geographic penetration, and that gives us double-digit growth. Again, to repeat, I wish they were cheaper from a multiple standpoint, but we think they will remain defensive stocks. If you want a more, quote, traditional financial, Brad, I take you to a Goldman Sachs as an example. This company is executing technology advancements, including AI. They're watching their costs carefully, expanding into new businesses and restructuring as they go along. We think this is a good one in that mix.
You know, it's really interesting because you're talking about in Goldman Sachs, a wealth management and investment banking business. And then on the other side with Visa and Mastercard, talking about a little bit more of the everyday transactions that consumers might continue to make. What are you making of the health of the consumer, and where else in the portfolio that health of the consumer could pose risk? And then on the other side of perhaps a relief of economic uncertainty not panning out as bad as I guess we had anticipated it might on the early onset of some of the tariff announcements, what we could see in that relief from consumers as well.
Yeah, I think that we expect the consumer, which has already slowed some, to slow more. As you've been reporting, the soft data, consumer surveys, business surveys have really struggled, fallen off a cliff, as it were. And that's often a presaging what's going to happen to the hard data. We've not seen much deterioration there. Our guess is there's more of that to come as the consumer weakens, as the job market weakens some. You were commenting on Walmart and what they had to say behind the numbers. So we think we're going to see more weakness in the consumer, and that's therefore means the overall economy probably slows.
You know, some of the other names that you had, I believe Gilead was on that list. Why was that?
Yeah, we are underweight in healthcare, so struggling to find names. Gilead's a good product mix, whether it's HIV or some of the other areas that they continue to explore. The stock is not all that expensive, a good cash flow characteristics, and controversial, which makes it a little cheaper and therefore of interest to us.
Okay, and so now as we're thinking about kind of the earnings season that we've moved through the bulk of, and we still have one more bellwether, of course, in Nvidia and the AI trade that could really take some of its cues from what Nvidia has to say. It seems like Jensen Huang is still out there trying to strike deals, trying to make sure that there's more capacity that is being brought online for production. What do you make of all that, and how you're kind of looking through what we may hear from Nvidia as it applies to what has driven the past 2 years of consecutive 20% gains in the S&P 500 in the AI trade?
Yeah, so we think Nvidia will continue to produce good products, good services, good sales. So we like the company. We're underweight the stock again. We were in the current vicinity in the 130s not that many months ago, and then it went back in the 90s. Bought more then, taking that trading position and trimming it back again at these up 40% kind of levels.
I saw somebody wearing an Nvidia t-shirt on the subway, Bob, in Brooklyn. So I had to get that question in. Bob, thanks so much for taking the time.
Have a good one.